Welcome to the Web3 Vision, brought to you by ENS Vision. Coinbase, SuperRare, Didex, OpenSea. Today's guest is behind a big chunk of the most powerful Web3 companies. However, Nick Tomaino, founder of the venture capital firm 1Confirmation, is certainly not of the loud kind. Low extraversion, high conviction. That's how Tomaino defines himself on Twitter. And indeed, the more I research him, the more I realize that his investment strategy is all about fundamentals and conviction rather than hype. In some sense, he's the opposite of the high hype, low fundamental VC investors who just chase the latest narrative bandwagon. But it's not only about ethics. Don't get me wrong, Tomaino seems like a very nice and decent kind of person. But after talking to him, I realized it's also about success. Because chasing hype can only get you so far, while focusing on fundamentals makes your success in the medium and long term almost inevitable. But this avoidance of hype doesn't mean that Tomaino is not into hot new things. When a rising narrative is matched by strong fundamentals, you will find him there too. That's why he's also behind projects that are all about the next big thing, like WorldCoin, the open protocol that could revolutionize the way in which real people can be told apart from human-impersonating artificial intelligence. Or Farcaster, the social media network that is using a very slowly but surely growth strategy to succeed at what everybody else seems to be failing to do, to become the open source, blockchain integrated Twitter killer. And that type of talent for spotting the solid trends in the forest of hypey trends is also why Tomaino, at least we want to believe, decided to invest in ourselves, in ENS Vision. As he says, he's very bullish on decentralized identity, and he thinks that ENS Vision is one of the best ways of getting exposure to that fundamentally growing trend. But now let's start and meet Tomaino. Let's delve into the most promising Web3 and crypto trends. Let's pick the brain of this visionary investor. Hello, Nick. It's a pleasure to have you on the Web3 Vision.
Good to see you, Matt. How are you?
I'm good. You know, so far it's been all about Nicks. It's been first guest a Nick, then a Matt, now a Nick, I'm a Matt. It's been a Nick and Matt's world. So, you know, the first thing I like on this podcast, we are called the Web3 Vision. And the first thing is to ask our guests, what do they think about the term Web3? Because it's a very multi-meaning term that often leads to confusion because we can be talking about different things, right? So what's your favorite definition for Web3?
I guess Web3 is kind of the overarching term for a movement to a more decentralized world. I like just crypto. To me, Web3 was kind of a term created in Silicon Valley by people that thought that crypto had kind of a negative connotation, and Web3 kind of sounds more positive, I guess. But whether it's crypto, Web3, it's a movement of people around the world that want a world where centralized governments, centralized companies have less power, and people around the world have more power. So that's at a high level how I would describe crypto, Web3, whatever you want to call it. I've been part of it for over a decade, and that's kind of been consistent in how I've seen it as these different, terms have arisen.
Yeah, and that's a very good one. There are more narrow definitions of Web3, but this one really encompasses it all. So yeah, I like that one. By the way, when you talk with normies in real life, you are talking to somebody like your sister-in-law, and you have to say very quickly what you do. Usually you say, I'm an investor in blockchain or in Web3 or in crypto. What's your go-to word for normies?
Crypto.
Still that. Yeah, still that one. Yeah. Makes sense. That's the one that people understand. I use that one also. As you said, some people find it like a bit like with negative connotations, but I really don't care, because I think people are gonna hate any word that you try to use if they want to hate the what is behind. And it's gonna succeed irrespective of the word. So, but it's interesting to know how people talk about the subject. So,
I would also say, I mean, Web3, you know, it focuses more, it compares, it's a term that compares to Web2 and creates kind of a vision for a new internet, which I like. But, a big part of crypto is actually the assets that you can own. And I think crypto, people point to it as maybe degen or think about the scams and stuff like that. But at the end of the day, crypto giving is about ownership of assets and different forms of assets. And so I think it's it's the right term. And I mean, at the end of the day, I also don't know how much different terms matter. It's really about the products that are useful for people. And there's marketing and kind of how the terms you use certainly matter to some extent, but I think they matter less than actually most people think. And at the end of the day, it's just about products that people can use that are useful for people.
Yes, and also something that many people don't realize, it's almost impossible to change the way other people talk. So sometimes people say, now let's stop calling it NFTs because it's a very ugly word, which it is. And now let's call it digital assets or whatever. And it's like, okay, we can try, but people are going to call it whatever they want to call it. And if the press is still, the media are still used to NFTs, they are gonna, that term is the term that is gonna survive. So there is only so much that one can do in terms of naming things. Your origin story before crypto, where did you grow up? What did you study? What did you do?
I grew up in Massachusetts, a fishing town called Gloucester, Massachusetts, and it had a pretty kind of typical middle class Northeastern United States upbringing. I tried hard in school. I played a lot of sports, and kind of I grew up really like a lot of people in the Northeast, worshiping institutions in a lot of ways. I really wanted to go to a prestigious university, and I believed everything that the New York Times wrote as truth, things like that. And yeah, somewhere along the way I kind of veered off, but that was very much my how I started.
It's interesting. You can put yourself in other people's shoes, not only like in crypto people's shoes, but in more normie shoes. So that's super useful. And before discovering crypto and Web3 and all this world, did you work somewhere else or did you do something professionally or not yet?
Yeah, no, I started, I mean, when I graduated college in 2008, Bitcoin didn't exist yet. This whole industry didn't exist yet. So I knew I was motivated. I knew that I wanted to make money. And I wasn't yet really thinking about entrepreneurship or technology, really, even out of school. It just wasn't what I was exposed to. And I, again, wanted to get the prestigious jobs out of school. I wanted to get into banking or be a trader on Wall Street or something like that. So yeah, I had a job as kind of a trader on Wall Street as my first job out of school. And right around that time is when I really started using the internet a lot and using Twitter and reading blogs and stuff like that. And that was really kind of how my eyes opened to a world out there that was removed from the Wall Street track, I would say.
What was the moment in which you found out about crypto and decided, I want to try this?
Well, it first started where I was just, I was curious about entrepreneurship and tech in general. And Fred Wilson's blog actually was very, important in that journey for me, like avc.com. Fred was very, very actively blogging every day I think, at that time, and I just loved reading his blog. And then I reached out to him and got formed a bit of a relationship with him. And I thought it was really cool that you could just reach out to someone that was at the top of their field and they would respond. And that was also kind of very different than Wall Street, where you couldn't really do that. It was just like you join the company at a low level and you don't have exposure to what's going on kind of at the top. So I was just really curious about the entrepreneurship and what technology could do. And then I actually ended up working at a venture capital firm as my kind of second job. And it was then that I kind of fell down the Bitcoin rabbit hole and ultimately decided that I wanted to go all in on Bitcoin. At the time, it wasn't crypto, it was just Bitcoin. This was in 2011 when I first, read a Wired article that was talking about this magic internet money that was being used to buy guns and drugs. That was kind of the early media narrative on Bitcoin. At that time, I was curious, and I've kind of always, even dating back to high school in some ways, I've been an online person that was kind of curious about connecting with people online that were interested in the same things that I was interested in. Like in high school, I collected sneakers, and Nike Talk was an online forum that I used quite a bit in high school to talk to people that were interested in collecting sneakers like I was. And so when I saw about Bitcoin, I wanted to see kind of who was talking about it on the internet. And I came across Bitcoin Talk, which was the first online forum that Satoshi created, and r/Bitcoin, the Bitcoin subreddit. And I really kind of dove into those communities, and I saw that the media narrative was one thing, but the truth was very different, right? The media narrative was this, and magic internet money used to buy illegal stuff on Silk Road. And that was kind of an early use case, but that wasn't all of what was going on by any stretch. And I saw that on these online forums, kind of there's this passionate community of people from around the world that weren't aligned by physical location, but they were aligned by economic incentives, meaning they all owned Bitcoin, and beliefs, meaning they all kind of believed in the values of Bitcoin in terms of inclusion and transparency and freedom. And so that's really kind of what hooked me, kind of seeing this really passionate community that were aligned by economic incentives and beliefs. So a lot of people talk about falling down the Bitcoin rabbit hole for the technology or the economics, and those were also interesting to me. But for me, at the end of the day, it was kind of the social movement that I saw happening. And I think that's still an underappreciated aspect of the crypto movement, really.
Yeah, especially from the outside, I think it's not very well known. From the outside of crypto, people only know about the money.
Yep.
But yes, and the community is something that is not even discussed. They don't even know about it. And that first venture capital firm you work in, it was nothing to do with crypto. It was a tech venture capital firm.
Yeah, it was tech. It was kind of late stage tech, investing in like enterprise software companies. So it wasn't super exciting in terms of the businesses that we're investing in, but it was a very good, the partners that I worked with, it was a firm called North Atlantic Capital, and they were great guys, and they kind of taught me the venture capital business, which was really valuable for me. So it was a good place.
And after you started to go into the Bitcoin rabbit hole, you at some point land in Coinbase, right? I don't know in what year.
2013 is when
2013. How many years you were there?
About 3.5.
3.5. And can you tell us a little bit about your experience there? Because I think that in Web3, entrepreneurship and investing and venture capital, there is like so many people that has gone through Coinbase. It's like a very, like an incubator of talent for some reason. Yep. So can you tell us a little bit how it was Coinbase in those early days?
Yeah, it was super fun. I mean, I basically hustled my way in the door. Like I knew I wanted to do something in Bitcoin. I talked to as many entrepreneurs were building in Bitcoin back in the 2012, 2013 time period as I could. And Brian from Coinbase was really the first founder that I met that I actually would have wanted to work with outside the context of Bitcoin. Back then, there were a lot of, interesting forward-thinking founders, but no one that I really just kind of gelled with and could see myself, wanting to work with long term. And Brian was kind of the first that I met that actually, I would have wanted to work with, even if it was some other, type of business. So, I was kind of a utility guy there, leading business development and marketing and community building. I did everything from, manage the Twitter account to, write blogs, to lead business development deals. And at the time, Coinbase was very focused on merchant payment processing. And so I was trying to convince, big online commerce companies to use the Coinbase API to accept Bitcoin payments. And that was very useful for Bitcoin at the time because it gave it credibility. And we were, getting media headlines when Overstock became, the first online retailer to accept Bitcoin, and Dell and Dish Network and Wikipedia and some of these big brands that people knew, when they saw that, these real brands were actually accepting Bitcoin, it was kind of helpful in people believing that this was actually something legitimate and not just used for, illegal activities. So that's really what I was kind of focused on in the early days of Coinbase, is kind of, leading those deals, doing community building, marketing, stuff like that. That's what I was good at and really enjoyed, and still do, really.
Payments and cryptocurrency, it's something that I know that in the early days I've heard more people before you mention, OGs like you mentioned at the beginning. We thought it was going to be all about payments and cryptocurrency. I think Brian also mentions that very frequently, and we thought that very quickly Bitcoin and other cryptos later were going to be adopted by merchants, like and some movements were made in that direction, right? And why do you think it's not like neither a priority for businesses nor a priority for us ourselves? It's like we don't really mind, we don't really are trying to push that aspect very strongly anymore. So why do you think nobody cares about that a lot for now?
Because it's still first and foremost an investment, and kind of a new asset class that people around the world can participate in from an investment perspective. And I think in some ways, even in the early days of Coinbase, we saw the volume and what people were actually using crypto for, which was kind of as an investment. But especially back then, it was hard to raise money just pitching crypto as an investment. People didn't really get it, and so you kind of needed to relate this new technology to something that already existed, and kind of Bitcoin as a payment network was just more relatable to new people and to investors and stuff like that. So I remember even like the Coinbase Series C deck, it was all about payments and developer use cases and things like that, and not focusing on investment at all. And of course, Coinbase is now a $15 billion plus business based on crypto as an investment use case. And I still think that's the most interesting aspect of crypto. And even as an investor now, we're still investing in that use case. I think there's a lot of other interesting use cases that are coming, but it's the people, I think, especially in the US, people kind of underestimate how powerful this new investable asset class for the world that anyone can participate in is. And if you think of everything really that's worked at scale, whether it's cryptocurrencies themselves, DeFi, NFTs, it's been all about crypto as a investment. And in the US, we can pretty easily access a lot of different investments, but for people around the world, it's much harder. And so, these new investable asset classes for the world, that's really what's worked and what's really been the unique and interesting thing about crypto to date. And it's funny, a lot of people, especially on Wall Street and stuff like that, dismiss that because they're part of the traditional investments. But I think that's a very real and still widely growing use case. Like everyone in the world is becoming an investor, and that's a really powerful thing. It used to be, something that just a exclusive class of people participated in. You had to go to an Ivy League school or something like that, and you had to work at certain companies, and everyone is becoming an investor, and that's I think a great thing, and it's an empowering thing. You don't just have to be a certain type of person or from a certain background, and crypto really enables that for a lot of people. So that's still what I'm most excited about. But of course, there's other things, and now with stablecoin, I think to answer your question about maybe why payments haven't really worked yet, I think it has been because just people want to invest, and they have the tools they have for spending are okay for most people. And the interesting thing has been investing, but I think with stable coins, that's changing. And people that own Bitcoin, we saw even back in 2013, 2014 at Coinbase, they didn't really want to spend Bitcoin. Maybe they were willing to spend a little bit on it to support Overstock, because Overstock would accept it and things like that. But at the end of the day, people wanted to hold Bitcoin. They didn't want to spend it. And I think it's still relatively early in stable coins as a widely used payment mechanism, but that's coming too. And I think, of course, there's benefits to Bitcoin, Ethereum, stable coins as payment networks as well. It's just I think the existing payment networks are kind of more competitive, and so it's slower to happen than like having a new asset class that there's no alternative to, which has really been the main use case to date.
Now listening to you, it just came to my mind that maybe the merchants that should adopt cryptocurrency payments as soon as possible would be the merchants that want to sell something to the people in the third world. Like, for example, maybe they want to subscribe to, I don't know, ChatGPT, and for many of those people, I think it would be very tempting to use their crypto, because their local currency, and also in many of those countries, they struggle with transforming crypto in their local currencies, because many of those countries are very authoritarian. So maybe there is something there.
Well, look, I think people have been using crypto as a payment network. Like there's lots of people in the world that that hold and love Bitcoin and use Bitcoin. That's just not the main use case for people, and it's not necessarily something that new people are joining to use that as the main use case. But whether it's Bitcoin, Ethereum, whatever the cryptocurrency is, there are people within that cryptocurrency that use it every day as a payment network. It's just it hasn't been a use case that's really bringing new people in, but it's very much a use case that the existing community, and there's no better, I think, example of that than NFTs, right? I mean, Ethereum and ETH is the payment for NFTs.
Absolutely.
And I would say that's been probably the payment use case that's worked the best. And it's actually interesting. I mean, we've kind of looked at this, ETH versus USDC in NFTs, and still kind of 95% of NFT volume, roughly is ETH, not USDC. And so I think I'm bullish on stablecoins being potentially a use case for new people to come in. But even, within Ethereum, I think if you're already using Ethereum, you may prefer ETH as the payment versus USDC.
Yes, and also now you reminded me of another payment use case very common in crypto, that is salaries and other kinds of work arrangement. Many people are paying other people in actual crypto, not in fiat. So
for sure, the frame I use, I mean, is like, each cryptocurrency is almost like its own country, where people, you to participate in the country, you own the cryptocurrency, and within the country, you might transact with each other in the native cryptocurrency. You might, promote things like that. And so these countries are very much existing and thriving. I think the question is, how do we get more people in? How do we grow? And that's where a use case like payment network that's really easy for anyone to use comes into play. So.
After some time at Coinbase, you left and you decided to go solo. And did you straight away created your 1Confirmation fund, or you did something in between?
I joined another venture capital firm called Runa Capital for about a year and a half, I think it was, and I was focused on crypto pretty much solely while I was there. And at that time, kind of 2016, early 17, most people, even in Silicon Valley, still didn't really believe in crypto. And so I was kind of, pushing to do deals there. And, they were listening to them, but couldn't really get all the way to the finish line on them. And so I decided I wanted to, do my own thing, and they were super supportive. They were kind of my first LP, and are still kind of core LPs, have been in all our funds. So yeah, I was lucky to work with some great people there that kind of helped me really get started with 1Confirmation. So
sorry, for the people who are not very familiar with the venture capital terminology, LP is a type of investor in a
limited
venture
partner.
capital.
Yep, exactly. It stands for limited partner, and it's the investors in the fund.
That's
so they
great.
give me money, then I invest that money.
That's very good that they helped you and are still with you. That's a very good thing. Okay, so now let's switch to our Web3 crypto block, although we've already been talking a lot about that. But on the Web3 Vision, we like to play devil's advocate, because we think that that helps us to make people make the best case for something. No, so in regard to Web3 and crypto, there are some things that people tend to say against Web3 and crypto. One of them is, for example, the use case. In venture capital, as you very well know, if someone is pitching you something that is too complicated, or that it would need for too many stars to align before it happens, or before it can get actually a lot of traction, run in the opposite direction, right? So many people would say that actually Web3 is exactly that horror scenario, in which it's all about pitching something that is complex to understand, and also many things need to happen before the use cases for Web3 are fully realized?
Well, I mean, I kind of mentioned this earlier. Like, I think the main use case is investing, and new global investable asset classes are, I think, really interesting and important for people. So whether it's cryptocurrencies or NFTs or DeFi, I mean, those are the use cases that have really worked quite well. And clearly, those are important use cases for the world, right? Millions of people are using them as that. So I think we've yet to see a use case beyond investment that's really captured mainstream attention, and I think it's only a matter of time. But again, I think some people dismiss the investment use case, and that's why you have people saying it's early, or we haven't seen those use cases yet. I don't think it's early. I mean, those use cases are mainstream use cases. I think, of course, we want to continue to grow, and there's lots of products that I think are going to get us there. But to me, the investment use case is the main use case, and probably will continue to be the main one. And I think there will be other main ones, but that alone, I think, is a pretty awesome use case.
I think it was again Brian Armstrong who said that if only a crypto managed to create sound money, as it has already done, that would be enough. Enough revolution, enough use case. It's so absolutely essential for society to have a store of value, such as mainly Bitcoin, but also other cryptos, that only that, a portable sound money, it's like amazing. So
But what about to me, I mean, I would argue that a tool for global creative empowerment may be an even bigger and more important use case, and that's NFTs, right? So a tool for anyone creative in the world to make money at global scale, I think that is an incredibly powerful use case that I would argue could be even more important than sound money. So there's a few. I don't think it's just the sound money use case, which again, I started as a Bitcoin maximalist, and I believe strongly in Bitcoin and the sound money kind of thesis. But I think the truth is, more people in the world care about culture than they do about money directly. And so, well, the powerful thing about NFTs is kind of combining, culture in money in a unique way, where it's not just about the money, right? It's about the image, or the music, or the video, or the writing, or the game. So to me, that ability for anyone creative to mint and sell kind of a scarce, authentic version of their creation, that is a use case that I'm personally even more excited about than sound money.
Good point. And another criticism that is very recurring in regards to Web3 is the usability. Everybody says, and oftentimes with a lot of reason, that there is usability problems, and that's obstructing adoption. And I wanted to know what's your take on the reason for that problem with usability, because some people say it's because the underlying tech is very complex, and it's normal that it's not easy to put layers of simplicity on top of that underlying complex tech. But at the same time, a computer, the internet, an iPhone, the underlying tech is incredibly complex, but some people manage to make an iPhone super easy to use, or some apps. There are some terrible apps on Web 2 too, but some apps, the ones that succeed like crazy, like the initial Google was a success, overnight success almost, because it was so simple. And now the biggest example in recent history is ChatGPT, the fastest growing app of all times. And in part, it's due to its simplicity. Of course, it's also used to how useful ChatGPT is. But I don't know when you found about ChatGPT, but I happened to find about it 1 month before ChatGPT existed. I discovered the API of GPT, not ChatGPT, but GPT. I started to play with it. My mind was blown, as anybody who gets in touch with advanced AI, right? But it's true that the interface was a bit ugly, was a bit confusing, the way of logging in, etc. And it had been out, it was almost as useful as ChatGPT, and it had been out, I think, for 1 or 2 years. But the moment they created a very, very, very usable UI, boom, people underestimate the power of super easy UIs. And why do you think in crypto we have so many people complaining about the UI?
Well, the core benefit of crypto, one of the core benefits is censorship resistance, right? It's giving users the ability to control their own money, control their own data. And there's a trade-off between censorship resistance and UX, right? So you could have a great UX, but it's centralized, and that's Coinbase, right? And there's a strong, need for that type of product, but there's also a strong need for non-custodial wallets, right? Whether it's MetaMask or Ledger or Coinbase Wallet, they also have a non-custodial product. And a lot of the interesting use cases are because of censorship resistance, and a lot of the main benefits, right? Why someone might want to hold Bitcoin rather than dollars in the US even right now is because they can control that themselves, and they can't have any government or company come along and take that from them or censor them or block them from the network. That is really important. And when it comes to having those censorship resistant products, that requires users to control their own private keys, and controlling your own private keys is a new behavior that users aren't used to. And so I think that that's what it comes down to, is, products that, either go full centralized good UX, and there's a need for those, and you could argue that there's maybe even a need for more of those, but those products also lose a lot of the core benefits of crypto, and so you also need a lot of the products that are are on the side of censorship resistance and kind of non-custodial wallets. And I think like a lot of people, we're excited about smart contract wallets and EIP 4337, which the promise there, and we invested in one of the first smart contract wallets called Authereum, which I think we invested in 2019, and the promise there was to create a wallet that gave people control of their private keys in a smart contract wallet, but offered a very similar UX to that they're used to kind of in a Web 2 world, and trying to getting the best of both worlds. And at that time, it wasn't quite ready. They had a good product, but the gas fees got really high. It became really expensive to create those wallets, and Also, some of the kind of core infrastructure to make those wallets really good didn't even exist yet, and so I think it was just early, but I think that's coming. And we, even one of our most recent investments is a company called Pimlico, which is Christoph is a great founder that was one of the authors of EIP 4337, and now he's building infrastructure that makes it easy for developers to create their own smart contract wallets. And I think we could be getting close to a real breakthrough in UX where people get kind of a experience they're used to with not worrying too much about private keys in the Web 2 world, but actually still control them and can't be censored. And that's pretty exciting.
Yeah, in that regard, another company that I believe, I'm not sure that your fund invests in is WorldCoin.
Yep,
Yes.
We're small investors.
Small investors. So the thing is, it's now fashionable to hate on anything that has anything to do with a body part, right? It's like people automatically, and it's normal, it's good to be cautious, but I see that that a lot of people are a bit like reluctant because it's about scanning your eye, and I find it a bit funny because all those people give their entire face to Apple, which is one of the most secretive companies in the world, and they do that. WorldCoin is a protocol, an open protocol that is not an opaque company, right? So in that sense, I think, and also they don't store the data about your body parts or anything like that. Well, it takes some explanation to go into the details. We are not going to go into the details now. I would like to have the creators here soon, but I think one of the amazing use cases for WorldCoin would be to create a user-friendly way of connecting a human with a cryptocurrency address. Your eye, your face, some kind of identification of your own being, right? And that totally would fix once and for all the keys nightmare, because they really are a pain. And yeah, I think if we start to get a strong protocol like WorldCoin, or maybe another one succeeds instead of WorldCoin, maybe in that direction there is something that can be done to definitely improve the UI.
Yep. Yeah, I mean, I think I understand why people get upset about WorldCoin. It's certainly, the orb elicits a very visceral reaction, because the idea of this company that has a centralized database of eyeball data, it does sound very dystopian. And crypto people are distrustful generally of big institutions, and so I get it, and I get the negative sentiment that some of like crypto Twitter has, but to me it's like a product like this has really big potential to bring in a lot of new users. The airdrop is one of the most powerful mechanisms in crypto, but the recipients of airdrops are people that are actually using crypto. And so how do you give an airdrop to people outside of crypto? And it's a product like this that makes it simple for people to claim crypto very easily without already having crypto. So that's the promise. I think the team is quite strong and is also well-meaning, and does not plan to have a centralized database of eyeballs that they're going to give to governments and stuff like that. But they need to prove it by open sourcing all the code, and open sourcing all of the the device information and all that, which I think will come over time, and we'll see. But certainly, as we think about the trade-off between censorship resistance and UX, I think experimenting on both sides and both extremes is good. And in the middle, which is maybe where something like WorldCoin is, and where something like smart contract wallets are, could be a really big breakthrough if we if we can crack the nut. So we'll see.
Yeah, and actually, before we were saying that words don't matter a lot, but I think sometimes, in some cases, they matter, and I think the orb wasn't the best term to call it, because it's a bit too science fictiony, and to like we associate science fiction with dystopia and all that. So I would have gone for something a bit more, even if the orb sounds cool, sounds very cool, but it also sounds like something like from a movie. And yes, but yeah, I think if they do a good job at being transparent and telling their story, it's gonna be very successful, because the age of the machines is nigh, and very, 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 very soon we are gonna have a human impersonator AI agents everywhere, and identifying yourself as a real human is gonna be so big that it's either gonna be Apple and Google and two or three walled garden big tech companies creating the solution, or it's gonna be an open solution on the blockchain. And I prefer a million times if it's an open solution on the blockchain like WorldCoin. So anyway, so another subject that is very common in people who criticize crypto and Web3 is the grifters and the companies selling hot air. Some people say it's all grifters and it's all hot air. But even people who accept that crypto has good things, they say there are so many grifters and scammers. Why do you think there is that perception?
I think there's there's a lot of grifters in the world, and maybe it gets more highlighted in crypto, but I don't think it's any different than crypto. I mean, FTX certainly didn't help that perception, but the outside world thought that FTX was the best thing ever in crypto, right? So it's like, I think it's just media kind of creating and controlling narratives. In the case of FTX, it kind of, more than anything, I think exposes the fact that mainstream media and politicians are the biggest grifters there are, because they, lifted up the biggest grifter in crypto. So I think it's kind of all narrative and media creating narratives. And at the end of the day, there certainly are a lot of grifters in crypto. Maybe one thing that makes it a bit easier to be a grifter in crypto is everything's open source, or at least most things are open source. And so it's easy to copy the code and create something that you market as different without actually being different. And so there's, a lot of that in crypto. And certainly the permissionless element of it means that it's easier for people to participate and potentially get sucked in. But at the end of the day, I think an open permissionless system is the best thing for society, because as FTX showed, the grifters get exposed, they get fleshed out, and we move on. And so if it was traditional Wall Street in a separate timeline where it's not this open permissionless system that anyone can participate in, you likely still have an FTX emerge, but they don't get exposed, and maybe they become the biggest company, in the industry. And so I think, yeah, to answer your question, it's like there certainly are grifters in crypto. I don't think it's any more or any less than any other industry. It's just that in crypto, they actually do get exposed eventually. And there's, I think, a lot of grifters in the traditional world that continue to grift their way to, the top, and lots of money and fame. And those, one of the things I love about crypto is those people, I think, tend to get flushed out, as we've seen with, not just FTX, but Three Arrows Capital, and Luna, Terra, and many others. So
Definitely, it's like there is a lot of creative destruction going on in crypto all the time, and it's like a little bit of like a periodic purge that we come out of it like stronger, like a phoenix. The last thing that many people say about Web3 as a problem, and also even for people like myself who have been here for just a couple of years, we still sometimes are still wrapping our mind around the concept. And I really want to pick your brain here, because you've been through many things, and one of the things you've been through is the 2017 ICO boom. And the objection that many people make about crypto is that our token funding kind of system, in which companies issue tokens or protocols issue tokens, some people say it's confusing, or some people say that it doesn't have substance. So in that sense, can you explain to us in what way they are a better way than issuing, for example, going public like Coinbase went, versus issuing this kind of tokens?
Well, better from the perspective of who? I mean, one big benefit to why a lot of people like Uniswap, for example, more than Coinbase, is you give direct ownership of your product to users, and there's purely aligned incentives between users and creators. So we've invested in a lot of marketplace businesses that have ended up launching their token and kind of converting equity to tokens, and are big believers in this model, because again, purely aligned incentives between users and company is very powerful. Why are those tokens valuable, or why do people believe those tokens are valuable? Well, again, I think there's different stories that different people believe. I mean, the governance token story has been the most common, and that's and you basically, by owning the token, you have a vote in protocol decisions, in treasury funding decisions, and in kind of the boom DeFi summer, if you will, of a couple years ago, I think there was kind of an expectation that one of the things that governance token holders would get potentially in the future is revenue directly kind of from the protocol as well, and that could be basically voted on by token holders. And so a lot of these token projects were getting kind of even equity like or inflated equity like expectations about getting real value back, just like you do in a company. And so in those cases, they were effectively equity like investments. And that hasn't really played out. A lot of the big ones have not actually decided to give revenue directly to the token holders. And of course, if you do that, then it becomes more like an equity, which could be, more dangerous from a regulatory perspective. So there's, a lot of considerations there. But at the end of the day, I do believe that, for marketplace businesses, if you can, in a compliant manner, give ownership of your token to users, that is generally the best way forward. And that's very different than, what we were seeing in 2017, which was, people creating these tokens and just raising a bunch of money before they had a product. Those were, we didn't actually, we launched our fund in 2017. We didn't participate in any ICOs because we kind of thought that was all, bullshit. People opportunistically raising money because tokens were hot. And, most of the founders at that time that were really serious and long-term thinking were not trying to capitalize on that. They were just starting small, trying to, build an interesting product to start, a couple people to start, right? So there's been an evolution, but I think, and there'll probably continue to be an evolution from, governance tokens to maybe something else and slightly better. But at the end of the day, I do think both for teams that want to capture a lot of value and users of products, having a product where you can give true ownership of that product to users is the best way forward.
So in that regard, you would recommend that system to the majority of the marketplace you invest in, like OpenSea or ENS Vision, or you don't think a token is a good idea for every Web3 marketplace?
I think it likely is a good idea for every Web3 marketplace, but there's also a time and a place for it, and timing is important. So I think the overall concept of giving ownership to users is something that every marketplace should do. And if you don't figure out a way to do that, you're likely going to, be beat by someone that does. But, I think being focused on the most important thing first, which is like product and delivering a good product to users, is always the most important thing. And often launching a token can kind of distract you from that. And if you have a early product that launches a token too early, I think that can also be very damaging. So I do think every Web3 crypto marketplace should give you ownership to users, but exactly how and when you do that, I think it's still, there's not a clear answer, and it's about figuring out kind of what makes the most sense for you. And it's not just as easy as, every marketplace has to launch a token right away and give it to users, because that can also really hurt your product long term. So it's, like everything, I always say, like, the stronger the narrative, the further from the truth. And the truth is very nuanced. And this is an example of that, where it's not an easy, yes, you need to launch a token right away. It's like there's nuance to it, and you need to be careful about launching a token too early and having the token not make any sense. But at the end of the day, you need to also figure out how to give ownership, of your marketplace to users.
Very, very interesting point. And timing indeed is like very, very important. Yeah, I agree. You cannot do that like just like that. It needs to be very well timed. And let's move to the venture capital block. Venture capital oftentimes is used like in a derogatory manner in Web3. Like, oh, that's Solana, that's just a VC pump and dump. And things like that, right? So what would you say to defend a little bit the profession, the trade of the venture capitalist?
Look, this is another example of, the stronger the narrative, the further from the truth. The truth is nuanced. Are there a lot of garbage VCs that are funding garbage products and that are strictly money focused, certainly. So I completely get why the VCs get a lot of criticism in crypto. Why I started 1Confirmation was I thought there was a need for kind of a thoughtful early stage investor that could provide not just capital but support on the business development, community building, all that stuff. And we've stayed relatively small. The one of the big problems I think in venture capital, this is venture capital broadly, but also crypto, is when you have massive funds, you basically get further and further removed to what's actually going on, and you make really stupid bets, and you're investing just in narratives rather than products that you actually understand. And that's one thing that I didn't realize until like being in the industry. You see these kind of brand name VCs that get a lot of press, and you just assume that they're really good decision makers because they were able to raise a lot of money and capture a lot of media attention. But there really is, I think, a lot of greed driving it. And when you have these big funds, you need to deploy a lot of capital, and you need to just invest in narratives. And that's why you see things like FTX. All right, FTX is a good example. It's like you have Sam Bankman-Fried, who, anyone that actually sits down and talks to him could tell that he's a scammer. But he gets hundreds of millions in venture capital because, at a surface level, it looks like he's such a good executor. He's getting all this media attention. He's close with regulators, all of this stuff. So I think, there's a lot of greed and a lot of, VCs that are just, investing in narratives to make a lot of money. And that's what creates a negative narrative around VC, which I completely get. And I'm obviously biased because I am a VC, and I'm, I don't think that I, behave like that. But there's probably some people that think that I'm like that as well, which, I could explain how I'm not, but that is what it is. These narratives kind of get created, and it's just, I think the value is in kind of finding the nuance. And I think it is, a nuanced discussion. There are a lot of garbage VCs, but I think there's also a lot of thoughtful VCs that aren't just, driven by money, and especially in crypto, want to bring more freedom to the world at the end of the day. And I think that's, to me, what crypto is about. And like how we invest is, we're thinking first and foremost, is this a product that is going to bring more people to crypto, is going to grow kind of the pie for crypto, and is not just a copycat or something derivative. And that's a filter for us. We're never going to invest in the fifth crypto exchange or something like that. It's like we want to invest in kind of these authentic creations that are focused on something new that we think is bringing more more people into the crypto space. But there's certainly a lot of money going into these next gen Ethereum projects that are kind of very narrative based, and and aren't very thoughtful.
Yeah, money and power always attract like the limelight of hate, even when the person or the organization that has that money or power is behaving correctly. And one example is crypto itself. Crypto, since there is money going on in crypto, outsiders have misgivings, right? Because money is always like that. There are people who do good if they are like top CEOs in the top companies in the world, and that there are people who do bad things doing the most humble work in the world, right? So there is good and bad everywhere.
Well
So
said. Well said. And I would add to that, um, we talk about counter signals a lot too, and it's often the people that are outwardly showing that they're doing good are actually really doing bad. And the people that are actually doing good, you may not know about or hear about. And again, FTX is, I think, a good example of that, where there were counter signals all over the place. They were very outwardly doing good, and they were actually doing bad. So yeah, no, it's a good point that certainly money and power attracts negativity. And to combat that, a lot of people with money and power are actually, signaling good, and people are falling for it when it's actually the truth is not good at all. So
yeah, no, definitely FTX did like charity porn. It was extreme showing off. It's a bit suspicious when people are stressing so hard how good they are, right? It's like, okay. Another thing in venture capital that is interesting is when venture capitalist is gauging potential promising startups, what is more important, the team or the ideas?
um, yeah, it's a good. I mean, it's a classic question that you think about when, if you're starting a startup or if you're looking at investing in a startup. I think the conventional wisdom is it's all about the team.
Mm-hmm.
The team, you need a good team, um, and I think that's true. But I don't think good teams is enough. I think it's really kind of a combination. You need a good team and incredible product timing. And I actually think product timing at the end of the day is the most important, because you could also be an average team, but you have incredible product timing, you're going to figure something out. If you're a great team with horrible product timing, then you're dead. So that was something that I learned from Coinbase as well. It's like, I think, um, Coinbase, we had a good team, but we also made a ton of mistakes, and it was by no means, perfect. And it was just the right product at the right time, and it worked. So right product at the right time can kind of, make up for an average team, um, and a lot of other things. So that's very much how kind of we invest at 1Confirmation, is like, of course you want a good team, but um, more than anything, you need product timing. And that's something that I think we do better than really anyone in the world, is that we are crypto native users, and we use these products a lot, and have a good sense for products that kind of first are really compelling to crypto natives, but then can break out of there. And how I even got involved with Coinbase, is I was like one of the first 100 users of the product, and just it solved a problem for me, and I thought it would solve a problem for many more people in the future. And that was also how we led the OpenSea seed round. Is we were like buying and selling CryptoKitties on the CryptoKitties website, and they charged 5%. And I thought, if it's really an NFT that gives true ownership to people, there should be a way to trade this for less than 5% right on another marketplace. And then I found OpenSea and was one of the first users of OpenSea, and then connected with Devin and Alex. So we strongly believe that product timing is the most important thing, and we put our money where our mouth is, and that's really, we're investing in products that we strongly believe in from a user perspective, because that's tended to be we would just have a good sense for the things that we really like tend to be liked by a lot of other people kind of in the future. So that's how we invest.
And by the way, the phrase product timing, another very common phrase is product market fit. Product timing would be to have good product market fit right now and not in your imagination. Would that be product timing?
Yeah, product timing, product market fit. Actually,
It's more or less the same.
a friend in LP, Andy Ratcliffe, created that term, I think. And yeah, it's a good one. It's though I wouldn't say, I mean, I don't use it interchangeably, because for us, we're not necessarily investing in things that have product market fit right now. It's more, we have a feel for a product that might have it in the future soon. So it's like we're looking for good product timing. We're not necessarily looking for product market fit, but it's the same idea. I mean, product market fit would be the time that you start to get a lot of users, basically. And we kind of think about a variety of, in crypto especially, we think of kind of a variety of things in assessing whether we think it's good product market timing. We don't necessarily need to see clear product market fit.
It makes a lot of sense. Sometimes you need to get in before that happens, right? Another thing is, do you always invest in companies that already have a product, or sometimes you just go for things that only have a prototype that they can show you, or even just an idea?
Yeah, no, we definitely don't need a product. I mean, our investment that I mentioned earlier was Pimlico, and at the time we invested, it was just Christoph, who we really liked, who had an idea for building infrastructure for smart contract wallet developers, and we funded that. So there's many times where we'll just invest in a founder and an idea, and oftentimes the founder has demonstrated an ability to get shit done earlier in different ways, but we definitely don't just need to see a product.
The more a product is in the idea stage, the most important the team is, and the more developed the product is, or even if it's already making money, the less important the team is, right?
Yeah. Yep, I would agree with that.
Okay, that makes sense. Regarding ways to invest for a fund, another way that I've read that you have entered is by directly getting exposure to NFTs. Are you still active in that kind of investment?
Yes, yeah. So we have 3 venture funds where we're making investments directly in companies and also cryptocurrencies and NFTs. But then we launched a vehicle to invest directly in NFTs as well. And so yeah, we closed out last year, and we've only deployed about 20% of the fund. So we're still very much making investments in NFTs, and likely going to be more aggressive about our investments out of that fund in the coming months. I would say there's a Sotheby's auction that starts today that is selling off the Starry Night portfolio. That was the Three Arrows NFT fund that they're liquidating, and so there's a number of CryptoPunks and Fidenzas and Ringers that they're being auctioned off that. So we're watching that, and doing a lot of other stuff on the NFT front.
One thing that I find interesting also is how you guys decide between diversification and specialization, right? Because I think you also have positions in pure cryptocurrency, right? And NFTs, and you invest, you get equity in companies. So how do you decide how much diversification I need? Because the more you are specialized in theory, the stronger you are at what you are doing, right? But at the same time, probably you see advantages in getting exposure of different types of assets, right?
Yeah. Yeah, I mean, I think it's more an art than a science. At the end of the day, we want to be giving the best risk-adjusted exposure to the crypto space, to our LPs, to our investors, and we, at the end of the day, you just want to be investing in the best founders, whether they are founders that are starting a new cryptocurrency or starting a new NFT collection or starting a new company. So we kind of that's one thing we're very focused on with our NFTs in particular, or whether it's cryptocurrency or whatever. It's like the founder, the creator matters most. And we have kind of a very similar strategy throughout all three, which is we want to be investing in authentic founders that are building kind of first of its kind type projects. So again, we're not investing in a Facebook engineer that's building the 19th cryptocurrency exchange, right? We're investing in creators or founders that are doing something new and authentic that we think can be pushing the space forward. And so it doesn't, we're not saying 80% needs to go here or 20% needs to go there or whatever in terms of how we're allocating. It's more feel based on what we think are the most important kind of projects that are pushing the space forward.
That makes sense. And also that's a good segue into, because we are a podcast created by the ENS Vision marketplace. And why did you invest in ENS Vision? What was your investment thesis for this decision?
Well, we really like, ENS and on-chain namespaces in particular as this new global investable asset class, right? So we've talked a lot about the use case for crypto that's really working is crypto as an investment. And, crypto as an investment, within that, there's many new asset classes. And I think, ENS and namespace broadly is one that we're really excited about. And, I've found that if you can build a good product and a good brand that's bringing these new global investable asset classes to the masses, that can be a really good business. And that's kind of what Coinbase did, right? That's what OpenSea did. And I think that's what ENS Vision is doing. So, yeah, I mean, there's a lot of different reasons why, but at the end of the day, I think, in terms of product timing, you have this new investable asset class, and you have a brand and a marketplace that's making it more accessible. That's something that we really like. Combine that with founders that we think are really strong and really authentic, and a team that is not just degen traders or something. It's like there's true belief in in on-chain namespaces over the long term, and a really strong community as well, right? We talked about this earlier. I think ENS Vision in particular has a really strong community, and that's rare, particularly for like a project that doesn't have its own token. So those are some of the reasons.
Yes, definitely the community around ENS and around ENS Vision is a very strong one. Let's now move to the future block. In regards to the best use cases for blockchain and NFTs and crypto, the use cases that you are most excited about, the ones with more growth potential in your opinion?
Okay, so we've talked about crypto as an investment, and that's the use case that I think is the strongest right now, and that has the highest probability to just continue to be the strongest in the future. And that's cryptocurrencies, it's DeFi, it's NFTs. And you could argue that those three are mainstream at this point, or very close to it. Beyond that, I think it remains to be seen. One thing about crypto, though, I think there's likely to be a new one that's going to, break into the mainstream in a big way, and brings new people in. It's probably not going to be those three. Those three are just going to continue to grow, but there's going to be something that grows faster. And that was, first it was cryptocurrencies, then it was DeFi, and then it was NFTs, and they came along after each other, and one was came faster after the next. And so, what is that use case going to be? I don't know, but we're obviously making a number of bets in kind of use cases that are most exciting to us. So, one idea at a high level is it's likely going to be something that is about creating kind of new organizational structures rather than just being purely about money or finance. And whether that organizational structure is like a DAO, I think products that are making it easier for people to create their own DAOs and form kind of these new organizational structures that have shared decision making. That's really interesting, and I think has a potential to be kind of the type of use case that brings new people in. I think decentralized social networks is another one. I think most people realize that the danger of having a small number of social networks that everyone uses, that have all the power and that could censor or that can manipulate things like that. And so decentralized social networks, it's no secret now that there's a lot of promise there. And I wouldn't be surprised if something like a new decentralized social network that really has a strong community and has a great product is the next to really break out. Those are a few ideas. I think DAOs and decentralized social networks are likely to be very big in the future, and products that can kind of make those more accessible to the masses. Maybe it's a combination of like a UX breakthrough, such as a smart contract wallet combined. The other kind of obvious category that a lot of people are interested in is gaming and games, and certainly a game that maybe makes it easy for people to participate and earn. And we've seen those with things like Axie Infinity, none that have really had really compelling gameplay and a good UX, and were games that you could participate in easily and earn. So kind of the combination of those things, I think, could be really powerful in bringing new people to the space as well. I've always thought that I tweeted this maybe like 6 or 7 years ago, that the first couple 100 million people would come to crypto to invest, but the next billion would come to crypto to earn. And so products that make it really easy for people to kind of participate in some way, contribute resources, and earn, I think is really powerful. And so we've seen like an early use case. I don't know how many of your listeners were around in kind of the 2012, 2013 when Bitcoin faucets were a thing. And a Bitcoin faucet was like a website that basically you had to click on a lot or just stay on or read something, and it would pay you a tiny bit of Bitcoin from doing that. And they were basically, I think, arbitraging like how much ads they could make, ad money they could make by having a big, ad on their site and attracting eyeballs and then paying out a smaller number, amount of money based on that. But those were, they weren't great products. They weren't well executed. They weren't like a good, design or UX really, but they were, I think, interesting products from an idea perspective. And I still think that is kind of in some way, shape, or form going to be a way that new users kind of get into this space. So maybe it's, a really compelling game that a lot of people love to play that pays you out a little, crypto for playing. Things like that, I think are going to be big ways that new people get into the space as well. So those are some ideas.
Play to earn, I think it's gonna have a new coming. Anything in regards to video games has a bright future with the advent of artificial intelligence and more free time for people away from work. Anything to do with gaming, it's gonna grow. If we thought it has grown and video gaming was important, we've seen nothing. And another thing that you mentioned, NFTs in particular for video games are great because I like NFTs for selling official ownership. I call it official ownership of art, of immaterial art. But it requires a little bit of a leap of faith, like deciding that gold has value or that Bitcoin has value. It requires a little bit of consensus, right? But NFTs in video games are great because the utility is built in and you can only use the video game asset if you have the NFT. So in that sense, it's really a fantastic, wonderful use case for NFTs, and it's a matter of time, right? I think before we see adoption of NFTs to exchange video game assets. And regarding the future, another thing is scalability. It's one of the biggest concerns, the biggest hurdles in Web3, and it has different potential solutions. One of them is L2s of Ethereum. Another one is many L1s for different things. What's your general view? How does that future look like from your standpoint?
I think it's a combination of a lot of different solutions, right? I don't think I'm not a maximalist when it comes to like everything needs to be on Ethereum. I think certainly there's some really interesting L2 solutions now that have really good traction. But I think I also really like the Cosmos kind of sovereign chain thesis, which is that there's going to be a world of many different chains that are interconnected, and I think again, I think Ethereum is going to continue to grow and benefit from likely several L2 solutions kind of emerging and starting to see really interesting apps and usage on there, but also there's some real benefits to having your own app chain, and that's where a solution like Cosmos works really well. And there will probably be some other L1s. Like I don't particularly, I'm a little skeptical when an L1 is like aggressively marketing itself as a more scalable solution. So that's kind of a counter signal to me. But I think there are people that like some of those solutions as well, and that I don't think they're necessarily going away. They may not be massive growth stories in the future, but I think there's going to be more growth around the sovereign chain thesis and kind of interconnected chains than on maybe any one non-Ethereum blockchain. But we're watching everything, and we're not we kind of we have strong opinions, but we're we're willing to adapt as well as we see new evidence, and we're not religious about anything. So
Okay, let's go for something that many people are super excited about lately, and that is impacting the world in general. It's impacting Web3, and it is the advent of advanced AI. To many of us, it has completely shaken our world and the way in which we are evaluating the future and the near future and many things. If you think that it's going to change the rules of the game or something, can you share with us what's your perspective on AI and its impact on Web3?
I think, I mean, I'm definitely using products. So like Midjourney, I love as a product. It's one of the more fun consumer products I've used in quite a while. Just a lot. Have you used Midjourney?
Yes, yes.
Yeah. It's very fun. So, um, I mean, I think, and I've of course used ChatGPT. Um, I'm not using it a ton for work related stuff, but some I would say, and so I'm watching it all. I'm using products in terms of its impact on crypto. Um, I think it remains to be seen. Like we talked about WorldCoin, certainly when it becomes really easy to fake stuff on the internet, which AI allows you to do, um, authenticity becomes more important, and proving authenticity is a core feature of a blockchain. So I think in some ways, the acceleration of AI probably makes blockchains more useful. Um, I I'm not super deep in it, so what I focus on is crypto stuff, and in terms of like actual products that I've seen, there haven't yet been many that are like kind of at the intersection of crypto and kind of this new wave of AI. Um, and to be honest, I mean, I'm skeptical of people that are like jumping from crypto kind of all in on AI now. It's likely they're just jumping from like one hot thing to the next, and that's often not a great way to create something of really significant long-term value. So we're definitely watching it closely. Another important kind of thing that we're watching is how this kind of gets co-opted by big companies and government. And in some ways now, crypto and AI are actually, in the US in particular, having very similar policy discussions, which are essentially, should the US kind of maintain a standard of freedom of innovation, or is this tech very dangerous, and should the government control it a lot? And that's a discussion that has been going on in crypto, of course, for quite a while, and it seems to be heating up more now in the US around AI as well. But it's a very similar discussion, and in some ways, actually, I think crypto is making is better suited to create a strong argument for freedom versus government control, because the nature of it is there's a lot of money behind it, and it's individual money. And so where AI has less support for freedom, likely because it's more kind of corporate and institutionalized in some ways. So that's kind of something I've been thinking about. And, the Sam Altman congressional hearing this week I thought was interesting, and you can definitely see different people and companies that are making certain arguments to regulators about how dangerous AI is, and that is going to be interesting because you see the same kind of discussion how dangerous crypto is, and often when you're creating this narrative about how dangerous something is in terms of technology, maybe it's because you're trying to capture your own interest in and lock in regulatory capture, things like that. So those are some things that I'm thinking about around AI, I guess, right now.
I see that you are not going to abandon Web3 anytime soon, but do you feel that a big chunk of the venture capital money that, well, the previously before this AI explosion, probably the most innovative thing that had happened in the tech world in a long time was crypto for many years. After the initial impulse of Web2 started to get into the diminishing returns kind of stage, the excitement for many venture capitalists moved to crypto. And do you think a lot of money is gonna leave crypto seeking the growth that artificial intelligence?
Not really. I mean, there's always some people that were never really in crypto that but maybe investing a little bit that are going to switch. There's there especially in Silicon Valley, there are a lot of more traditional funds that are just really jumping from one hot trend to the next. I don't think that's a great way to be successful long term, but there is a lot of that, or good amount of that. But I don't think, I mean, there's no like dedicated crypto funds that I'm aware of that are leaving or jumping or something. It's more kind of the traditional. So, I don't know. I will see, but it's not something that I'm really concerned about or thinking about.
Good. And also, I think they are probably going to grow pretty much in parallel, because another use case that it's going to be very important. I think artificial intelligence will bring some existential risks to crypto, but that's for another day because we don't have much time left. And it's a very long-winded theory that I have, but there is also big opportunities. And one of them is that the next thing in artificial intelligence is when the AI agents that are now trapped inside their bottles, like for example the ChatGPT brain or the Midjourney brain or this kind of agents, are gonna be free and are gonna be our butlers, and are gonna have to interact with our things and our property. And crypto is perfect because the traditional world of finance and banking and so slow at adapting to any kind of new thing with regulations. Everything is obstacles always, right? So when an AI agent needs to do something that you want for that agent to do with your money, crypto is already there,
Yeah.
especially self-custodied crypto. You can give them access to your, if you dare do it, you can give them access to your MetaMask. And so in that sense, I think there is enormous opportunities.
Yeah, machine to machine payments has or human to machine has always been, one of the promises of crypto. And it hasn't really happened yet at scale, but certainly, crypto is going to be the payment mechanism that robots use, that machines use, right? So that I agree with that.
before we finish, you have many babies, I mean, venture capital fund babies. Can you tell us about some of your projects that you are very excited about and that?
Hmm. I mentioned a bunch of them already, right? Trying to think of one that I haven't mentioned that that I could talk
Are you
about.
an investor in Farcaster, for example?
Yes.
Yeah.
Yep.
Because I
Yeah,
see
I've
that the
mentioned.
ENS community lately, it's getting interested in that project.
Yes. Yeah, Farcaster, the founders, Dan Romero, the founders, and Varun, who I worked with at Coinbase, are awesome founders and have been very focused on building kind of an authentic community on Farcaster, first and foremost. So they haven't been like aggressively marketing a decentralized social network to get users. They've actually been pretty gated, specifically because they've cared about kind of crafting this good community. And so, yeah, it's a great protocol. So Farcaster is the protocol, and then Warpcast is the product that the team created. And yeah, I use the product regularly, and it's a great way to find interesting new people and track NFT activity. That's kind of been a core feature. You link your Ethereum wallet, and you can see your NFTs and see who's buying what NFT and things like that. So certainly Farcaster is a great product that I think has as good a shot as any to be kind of the winning decentralized social network, or one of the big winners. Another dimension, just it's one that has been top of mind for me today, I guess, is Bridge. So Bridge is focused on stable coins. We talked a lot about how stable coins could potentially be the big breakout for crypto as payments at some point. And Bridge is focused on building APIs that make it easier for developers to integrate stablecoins. So one thing about stablecoins is that they've existed, USDC, USDT, but there haven't been tools that make it really easy for the developers to like integrate them into their apps. And so that's what Bridge is doing, is a developer that wants to create some new app that uses USDC as a payment, or even wants to move in and out of USDC in exchange for fiat, can use Bridge as the API. And one kind of use case that they've been really having success with is for DAOs that actually want to pay users, or participants or employees in fiat, but don't want to touch fiat or a bank account, and they can use Bridge basically as the bridge between crypto and fiat. So a DAO recently paid like a large IRS bill that they had in dollars, using kind of Bridge under the hood. And so, yeah, as a potential big catalyst for just more crypto as commerce, I think Bridge is really well positioned to continue to catalyze that. So those are a couple that come to mind. Obviously, there's many more, but those are a few.
We've come to the end of our podcast. Nick, thank you so much for coming on the show. And well, I think we've learned a lot from picking your brain today. And where can people find more about you and your work?
Just on Twitter, NT Money, and our website, 1Confirmation.com.
Fantastic. Okay, Nick. So thank you so much again, and see you around.
Yeah, thanks for having me, Matt. It was fun.
Thank you.